Are you concerned about losing half your wealth to taxes and have the government as your biggest beneficiary? Do you ever feel that an RRSP is just not enough and is too limited for your retirement needs? And are you concerned about building security for your retirement and protect it from creditors? Hi, my name is Koby Lerner and I'm part of one of the top wealth management teams in the country. We focus on helping our clients build wealth in the most tax efficient way. So if that's something that you have interest in, make sure to subscribe so you don't miss any of my future videos. Also make sure to like this video if you find it helpful. It really does help with the YouTube algorithm. In today's video, I'll share with you one of the best solutions to shelters income from taxes. Transfer your wealth efficiently to your children and increase your deductions from your corporate income taxes. This is a strategy that most Canadian business owners are not aware and not taking advantage of. And at the end of the video, I will even show you how you can buy real property with the money that is in your RRSPs. So let's jump right in. The private pension plan is taking advantage of the same legislation in place for large corporations. This is a Canadian tax saving solution for business owners and incorporated professionals looking for a better way of saving for retirement. So how do you shelter more income from taxes? Let's take Robert. He's 50 years old and has been incorporated for 20 years with an average historical T4 income of $100,000 a year. He expects to continue working for the next 20 years, earning a minimum of $140K of T4 income. As per the graph, under the PPP, Robert will be retiring with an extra $1,660,000 in his retirement fund compared to what he would have accumulated in his RRSP alone. Now, if you're asking yourself, where is that difference coming from? Well, the answer is that regardless of your age, your annual RRSP contribution limit remains constant each year. And by contrast, as you get older, your annual PPP contribution limit grows and exceeds those under the RRSP rules. This table illustrates the extra contribution allowed in the PPP at different ages. And fortunately, you can set up your PPP as late as age 71. The next major benefit is the ability to transfer your wealth without paying taxes. The biggest tax liability on the estate is the RRSP. When both the plan owner and the spouse pass away, the government deems the RRSP assets as a disposition and the highest marginal tax bracket is applied, effectively taking 50% of its value. With a PPP, the pension plan can be transferred to the children as long as they are shareholders in the corporation before the termination of the plan. Additionally, the PPP allows for income splitting at the age of 50 and not 65 as it is the case with an RRSP. Now take Robert and Pamela for example. Robert retires at the age of 60 and starts taking $170K from his RRSP, paying $55K in taxes. If Robert had a PPP, he could have started splitting his income with Pamela and their combined tax savings would be $18,500 a year. Another major benefit is the ability to increase your deductions from your corporate income taxes. Other than the extra savings, the pension plan allows you to make additional contributions each year to top your account if your investment returns are less than 7.5% to ensure full funding of your pension plan. Or in other words, if your portfolio drops 10% in a given year, you can make additional tax deductible contributions of 17.5% of the value of your portfolio. And another major benefit of PPP is the fact that you can deduct your investment management fees, which is something that the RRSP does not allow. And to top that off, the private pension plan provides the highest level of creditor protection in Canada, which is not the case for RRSPs, even if they're held in a life insurance contract. Now, this barely scratches the surface of all the benefits that come with implementing a private pension plan. But I guess if you're still watching, you want to know how you can buy real property with the money in your RRSP. Well, because of the ability to buy back past years of service, you can use your RRSPs to fund your private pension plan. And unlike the RRSP, the pension plan has the flexibility to invest in a wide range of non-traditional investment vehicles. Private equity, shares of a company not listed on an exchange, to name a few, and you guessed it, real estate. That's it for today's video. I hope you find it valuable, and if you haven't done that already, make sure to hit the like button, and if you want to see more videos like this one, don't forget to subscribe to my channel so you don't miss out on anything important. And if you have any questions or you want to have more information about how to set up a personal pension plan, you'll find a link in the description below. Thank you very much for watching, and I will see you next time.